A lot of people started to talk about Hershey stock, ticker symbol HSI. So let's do this analysis. Taking a quick peek at their earnings, and we see that they beat on EPS but missed on revenue. Most people like Hersheys the most because of the dividends, and I understand why, with dividend yield at 2.8% and some impressive growth stats. However, if we look at the total returns in the past 5 years, we see some interesting things. They were beating the S&P 500 big time, but they took a nosedive, and now they are underperforming the S&P 500. So could this be the perfect time to buy Hersheys stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Hersheys do? The Hershey company is one of the largest chocolate manufacturers in the world. It also manufactures baked products such as cookies and cakes, and sells beverages like milkshake as well as other products. Hersheys reported a revenue of 2.6 billion, an increase of 0.2% year over year, so not a lot of growth here. Organic sales, constant currency, even decreased a tiny bit. And net income also decreased, but the thing that worries me the most is the fact that this is decreasing at a much faster rate than the revenue. For the full year results, things are looking pretty good, so maybe the fourth quarter was just a miss. For the full year of 2024, Hersheys expect a 2.3% revenue growth range and earnings per share to stay flat. And Hersheys is very optimistic about the future with investments and growth. They have been focusing on expanding media reach and improve market shares. From here, they continue to focus on innovation, snacking, leadership. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Hersheys is a 40 billion market cap company. PE ratio is at 21, indicating they are around their fair valuation. Later in this video I will show you my 3 price targets for Hersheys stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on the current valuation on Hersheys. Revenue is at 11 billion, and in this graph we see that revenue went up in the long run. The lockdown periods really boosted the revenue. Most recently, things are slowing down again. Margins are increasing in the long run. To me, this looks pretty good. It's the same story with the EPS. Things are looking pretty good here. Analysts have a positive feeling for the EPS in the coming years, with 3 to 9% growth per year. To me, this looks pretty good. For the revenue, it is also looking pretty interesting. Of course, we have lower numbers with 3 to 5% revenue growth per year. Return on assets is sitting at 13%, which is a great number. Return on equity looks really good, and the most important number, return on invested capital, is looking really good at 20. It is slightly lower versus the 5-year average, but no big concerns for me. Current ratio is around 1, which is a decent number, nothing really special to mention here to be honest. And right now Hersheys has 5 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Hersheys has 400 million in total cash, so they can't pay down a big amount of their debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is looking pretty good. It is not really steady and consistent though. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company. increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.82%, which is a great number. Annual payout is at $5.48. Payout ratio is around 46%, and I prefer 50% or lower. So right now they have 54% left in cash to buy back shares, pay down debt, do acquisitions, and all other things. The 5-year growth rate is at 11%, which is a great number. On top of that, they have increased the dividend for 14 years in a row, which is really awesome. In here we see the dividends paid since 2012. You see that Hershey started to increase the dividends at a much higher rate in the past 2 years, which is really interesting. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that payout ratio is somewhat steady between 45 and 55%. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous years. And overall these dividends look really good to me, but how about the historical returns? I decided to compare Hersheys stock with the overall market, in this case the S&P 500. On the 5-year chart we see that Hersheys underperforms the S&P 500, but they were able to beat them for a few years. In total, Hersheys returned 93%, while the S&P 500 is sitting at 103% return. This is including dividends. On the 1-year chart we see that Hersheys had a minus 17% return, while the S&P 500 was soaring with 30% return. On the 6-month chart it is again Hersheys sitting at a negative return, this time minus 5%, while the S&P 500 did a great job with 15% return. On the 1-month chart it is still Hersheys that is sitting at a negative 4%. The S&P 500 is sitting at a positive 3% return. Bottom line, in the past 5 years the S&P 500 was the better choice here versus Hersheys stock. But could this be the perfect time to buy Hersheys stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 1, 3 and 5%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 16, 17 and 18. For the free cash flow margin I'm putting in the same numbers. For the PE ratio I'm putting in 19, 20 and 21. For the price to free cash flow I'm putting in the same numbers again. They don't have a big moat in my opinion, but they are capable of growing their margins at a high rate. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now Hersheys stock is around $194. I hit analyze and we see a lot of red numbers. We have a low price target of $103. We have a mid price target of $131 and we have a high price target of $166. To me the high price target is the most justified here. And to be honest, I was a little surprised by the outcome of only $166, indicating the stock is overvalued despite my higher margin expectations. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Hersheys stock is that I really like the business. It has caught my attention and the main reason being increasing margins and a great dividend track record. So from a dividend point of view things look really great with high dividend growth and a decent dividend yield. Most fundamentals look good, but they are lagging in revenue growth in my opinion. So I think in the coming quarters it is going to be very important. Are they able to turn the tide and get revenue growth back in 5 to 10% growth numbers? We will see. From a value point of view, unfortunately things don't look that great. I will add them to my watch list and keep analyzing them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and that it brings some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.